Hey, this is Dan Moralez, and this is episode number 5 of Homebuyer Radio. This week, I want to talk real quick in regards to kind of mortgage down payments. Now, I know in one of the previous episodes we talked about what types of down payments are required and the fact that you don't necessarily have to have a 20% down payment. Now, this week, I wanted to talk about, where a down payment can come from. One of the questions a lot of people have is like, do I have to save the entire, let's just say 3, 5, or 10% that you want to put down into a house? Does it have to be my own money, and do I have to have saved it on my own? In many cases, now there are some exceptions to this rule, but I would say in substantially most cases, if a property is going to be a house that you are going to occupy as your primary residence, in many cases, your down payment can come as a gift from a family member. So if you have a family member that's willing to give you a gift to be used towards your down payment and closing cost, that is an acceptable source of down payment. Some other acceptable sources of down payment that sometimes people overlook or don't think about is the ability to borrow against a 401k. If you have a retirement account that you've accumulated some money in, you can generally borrow against a 401k. And in many cases, the loan that you repay against the 401k, of course, you're paying yourself back for borrowing your own money. But in many cases, that loan payment's not going to count against you when we qualify you for the loan. So that makes it a little bit easier to qualify as well, too. Some other things that sometimes people don't think about when it comes to funding a down payment for a house is you can actually borrow against assets that you own free and clear. Maybe you own a car free and clear, or a motorcycle, or an RV, or something like that. Sometimes you can borrow against those things, and you can use those proceeds as part of your down payment towards buying a house. Now, keep in mind that the payment that you would have for that new loan would have to count as part of our calculations we do when we determine how much debt you can have and still afford to buy the house. So that's an option. Maybe not the best option, but that's certainly an option. And of course, there's always the option of saving a down payment. Now, one of the things that you want to look at when you're looking at saving a down payment is how long is it going to take you to save it, and what are the expected changes in interest rates and cost for a house to buy? Because a lot of times I have clients that will say, "Gosh, you know what? We're going to think, we're just going to wait a little bit, and we're going to save some money towards a down payment, and then we'll just come back maybe 6 months, a year from now." That is something that can certainly work for some folks, but you got to be careful because you can sometimes do yourself some harm using that mindset as well too. We'll talk about that maybe in next week's episode. Again, my name is Dan Moralez. This is Homebuyer Radio. If you have questions or concerns or anything we can do to help in the mortgage or real estate process, reach out to us, dan@danmoralez.com. That's DANMORALEZ.com. Again, dan@danmoralez.com. Phone number 616-931-4629. My NMLS number is 709729, and North Point Bank is an equal housing lender.